65 offers for one home. I'm Eric Peterson, owner of Kopa Real Estate, and in this video we're going to talk about how to get 65 offers on your home, the most recent real estate statistics for 78717 and Avery Ranch, rising interest rates, and what all this means for you as a buyer or a seller of real estate in 78717 and Avery Ranch. First, let's review the statistics for the January 2022 real estate market. 18 homes were sold in 78717 in January, which was up 5.9% from January 2021. The average dollars per square foot was up 27.7% to $273.76. Average price increased 34.5% to $683,134. The median price was up to $666,950, a 36.1% increase, showing the market shifted $176,950. So the lowest priced home sold in January 2021 was a condo in Lakeline Station for $525,000. The highest priced home sold was a new construction home in Heritage Oaks for $1,148,055, and that was the only home that sold over $1 million in January. Smallest home sold was in the woods at Brushy Creek at 1,656 square feet, and the largest home sold was in Heritage Oaks at 3,952 square feet. The home that sold at the lowest price per square foot was in Oak Brook at $217.33, and the home that sold at the highest price per square foot was a small single-story home in Northwoods at Avery Ranch for $305.92. On average, homes sold for 9% over asking price with only 10 days on the market before going under contract. As of February 1st, 2022, there were 3 active homes for sale and 28 homes under contract. Now, the lowest priced home sold in January 2022 was $35,000 over the median price for January 2021. And there were 10 homes that sold under $400,000 last January, which is $125,000 less than the lowest priced home that sold this January. The highest priced home in January 2022 is at $318,055, more than the highest priced home sold in January 2021. It's hard to imagine the housing market accelerating because it was already red hot, but that's what's happening. So would you believe there were 65 offers on a home in the area in January? So this home was listed for $750,000. And it's just hard to imagine there are 65 buyers for a home priced at $750,000 in the area. It's interesting to look at the breakdown in offers for a home with this much activity. So out of the 65 offers, there were 5 offers between $750,000 and $799,000, 22 offers between $800,000 and $850,000, 23 offers between $851,000 and $899,000. There are 10 offers between $900,000 and $950,000, and then 5 offers that were $951,000 and up. So let's talk about how you get 65 offers for your home. So the most important thing is you list a home that should have been listed for $925,000 for $750,000. So that's right, this home was significantly underpriced. And maybe that was a mistake, or maybe it was a great strategy because in the end they got a good result. Although it sure wasted a lot of time for a lot of buyers and a lot of agents. Next, you want to have something special about the home. So this home's a large single-story home with 4 bedrooms on over a quarter-acre lot, facing a preferred direction for many of the buyers in our area, along with a 3-car garage and zoned for great schools. So this is the type of home that would qualify for what I call aspirational pricing. And this is where there are so many attractive features of a home, it will sell for higher than each individual feature added together would indicate. So there is somewhat of a multiplier factor that happens because it's hard for a buyer to find another home with all of these same features. It might be easy to find a home with 2 of them, but not all of these features. So how does that affect you as a seller? Well, the most important thing it tells me is the buyer demand is high, and you'd be foolish to sell your home off market in this environment. You should also manage your expectations that this is a unique situation with an underpriced home. So if your home is in poor condition or overpriced, you may still get a lot of offers, but you won't get 65 offers. If you're a buyer, this is a great example of the market value of a listing having nothing to do with the list price. And buyers will often ask me how much they'll have to pay over asking price. And the right answer for that question is it depends. So in this case, it was over $200,000. But in some cases, it could just be list price. And there really isn't any absolute rule of thumb. So next, many real estate brokers will tell you that they always get offers accepted every single time. Of course, unless they're one for one, they're not telling you the truth. So the truth is I've had hundreds of offers not get accepted. We had clients that made an offer for this home. And although the offer for our clients was very competitive, sadly, it was not accepted for this house. And in this market, you have to have the memory of a baseball pitcher who just gave up a home run and get right back in the game. So we had to dust ourselves off, learn from what happened, and we got our clients under contract the next week on an even better home for them. So now let's look at interest rates. Expectations for this year were rates would increase to 3.7% by the end of the year. But this morning, I received an interest rate update that rates are already at 4%. So Ivy Zellman, who's a respected housing industry analyst who was ahead of the curve in the 2008 housing crash, says the acceleration in the market is due to buyers that were on the fence having FOMO about interest rates going up more than they have. And Ms. Zellman says that this fence-sitting flurry of activity usually lasts 3 months, and then we could see a significant slowdown in the market. She also believes we're overbuilding, and once the supply chain issues are resolved, there will be a backlog of new homes coming on the market. In a recent interview, Ms. Zellman said the backlog will be like winter is coming. So we'll have to wait and see. Of course, interest rates increasing will affect payments, but that doesn't mean prices will come down. It may just slow the rate of increase or cause a little inventory to build. And none of that will be a disaster, but for home sellers who are sitting on the fence, it might mean you'll be selling later in the year with more competition and buyers who are less motivated. To gauge buyer demand, the leading indicator we want to watch is the weekly purchase loan activity, not the overall activity that also takes into account refinance activity, but only purchase loans. Now, if we see a significant drop in mortgage applications that go on week after week, that may be the canary in the coal mine that tells us the real estate market will be softer later this year. What's our recommendation? Our recommendation for anyone planning to sell in the next 3 to 4 months is that you should contact us today so we have you on our radar in case we recommend to our sellers to get on the market earlier than initially planned. And what's the bottom line? Well, if you're thinking about selling your house this year, now is the optimal time to list it. Let's connect to discuss how you can put your house on the market today when there's still less competition. When you're ready, please contact us by phone, text at 512-791-7473. Or if you like, you can choose from our availability at copaseller.com. Thanks for watching and make it a great day.